Hey guys, welcome back to the channel. In this video, I'm going to be covering Sun Communities, ticker SUI, which is a real estate investment trust. All right. And if you guys are new to the channel, be sure to subscribe, hit that notification bell because I do go live most days, Monday to Friday, and you'll definitely want to join in on those conversations. I also run a private Discord if you're interested. The link will be down below in the description. All right, guys, let's get into the video. So a couple months ago, I covered this on my live stream, and it was basically Blackstone striking a deal with Sun Communities to purchase Safe Harbor Marinas for $5.7 billion. All right, this is a huge chunk of money, like a huge chunk of change from Blackstone. And Blackstone is, they're no stranger to the real estate space. They are the 1,000-pound gorilla in the room, all right? But what does that mean for SUI, right? What does that mean for Sun Communities? Well, Sun Communities is a manufactured housing and RV REIT, all right? Real estate investment trust. So what are they doing testing the waters, no pun intended, investing in harbors, right? Investing in marinas. That's not their bread and butter. That's not their, that's not what their focus is. That's not what their core competency is. So they ended up selling Safe Harbors to Blackstone. And basically what Safe Harbors is a membership website where, you can enter, you could pay for a membership and you could basically park your boat. You can park your or dock your boat in all these several different countries in Europe, right? So here's all their locations of where these safe harbors are, and Blackstone purchased this company from them, which is honestly a smart thing because Sun Communities, their bread and butter is, real estate. It's manufactured housing and RV parks. It's not marinas. So I applaud SUI for doing the right thing and being, good stewards of my investment money and, just not squandering it. So real quick, this is my REIT income portfolio. Well, this is my portfolio on M1 Finance, but this right here is the REIT income portfolio right here. I have $189,000 in here. And SUI, or I should say the manufactured housing section, makes up about 7.4% of that portfolio. And if we look in a little deeper, we can see I have SUI and ELS. Now, these are competitors in the space of manufactured housing and RVs. SUI is kind of the bigger dog, in the park, the bigger fish in the pond, so they have kind of a heavier weighting in my portfolio, but I have about $9,000 to them. And they've honestly been good stewards of my money. Like I keep mentioning, they haven't, squandered it. As you guys can see, it's been on an upward trend. Yes, we have been in this bear market for pretty much the last 3 years. I'm really hoping that we get out of this, that the 10-year treasury comes down and interest rates come down for mortgages, because this is going to be a huge tailwind for Sun Communities. Sun Communities, excellent management team. Their balance sheet is very disciplined. They take a very disciplined approach to debt. They're not over leveraged. Again, I am a huge fan of SUI, of Sun Communities. All right, so Sun Communities recently, and just to give you, just before I even continue, let me just give you a quick rundown of Sun Communities in case you don't know who they are. All right. They are a leading owner and operator in the manufactured housing and RV space. All right. They are one of the biggest leaders. They focus on acquisitions and development in high demand areas, and they're geographically diversified. They're not just located in the Sun Belt. They're not just located in California or even Florida. They're kind of located all over the United States. Manufactured housing and RV parks, they're a very fractured sector in real estate, meaning that mom and pops own them, individual investors own these spaces, and a huge player like a REIT also owns them. So it's a very, kind of shattered space. It does have a strong balance sheet and it is consistently making revenue. So I really, really like Sun Communities. All right, so here's some of the diversification that they do have. They have Park Holidays, which is located in the UK. Again, similar asset class, kind of the same, style of investing. They're going to go in, find assets and just purchase them, right? Put people in those assets, collect the rent. That's it. That's all there is to it. Nothing fancy, no fancy, sexy technology, no artificial intelligence, no chips, none of that. It's just a very boring business model, but it is a business model that works. All right. If we look in the United States, They are everywhere. All right. So every time you put a single dollar into SUI, it's diversified amongst, hundreds of park communities. So again, very diversified, very, in my opinion, a very safe bet on the space on manufactured housing or RVs, right? Some of the highlights that SUI has: they're the largest publicly traded owner operator of I keep saying multi-family, but it's really manufactured housing communities in North America. They have 288 MH communities with 97,000 sites, 97.3% occupied. All right. We want high occupancy because if it's low, that means people aren't paying rent. So the higher the occupancy, the better. For their RV part of the business, they have 166 RV communities with 57,000 sites in highly desirable, probably like, very dense areas where you would find RV parks, or where maybe housing is kind of hard to get. And think of like traditional housing, like a full house. All right. So RVs are, another way of getting housing, right? 32,000 annual sites in North America. Annual means like leases. And they have 25,000 transient RV sites in North America, 40 to 50% of which are candidates for conversion to annual leases, which is also very good. And they have their UK sector, or UK diversification, second largest owner and operator in the UK, 53 holiday parks, 18,000 manufactured housing sites with 4,000 transient, at close to 90% occupied. Of course, the higher the better, but I'm sure they are working on it, so not a big deal there. So recently, Sun Communities released that they're going to raise the dividend by 11% to $1.04. Now, I know that may not sound like a lot, but it is an 11% raise. Think about that for a second. You're getting an 11% raise for owning Sun Communities, okay? Typically, rents raise, about 3 and 4%. So to get an 11% raise on your dividend is really, really nice. And because they're selling, or they already completed the sale of the Safe Marinas harbors to Blackstone, we're going to be getting a special one-time $4 dividend, right? This is really, really cool. I like real estate investment trust because whenever they do these large sales of assets or buildings or real estate, usually that's accretive to investors. Usually me, you, I, whatever, we as the investor, we're going to benefit in one way or the other from the sale of these properties. We can get a special dividend or a dividend raise or, return of capital or whatever, right? It's really, really good. And it just shows that these REITs, obviously their values are in alignment with us as investors. So I'm a big fan of SUI because they're just doing such a great job. All right, this will be payable May 22nd, so this month, for shareholders of record on May 14th. The ex-dividend date will be May 14th. So again, if you're thinking about investing in SUI or you want to get some exposure to manufactured housing and RV parks, this could be your opportunity. All right. So just some quick things about SUI. So along with everything else, they also are going to be doing a stock repurchase program. This is a big deal. We like repurchase programs that companies do, right? We like stock buybacks. That's, seen as a very responsible move by the company. So I'm a big fan of whenever I hear REITs or whenever I hear companies that I'm investing into doing stock buybacks or share stock repurchase programs. So this to me is a good sign of a responsible company, of a responsible REIT. All right. So real quick, I just want to share with you guys, this is all REITs. All right. Allreits.com. I'm not sponsored by them. I'm not affiliated with them in any way, shape, or form. But I like their platform. This makes a lot of the due diligence of REITs easier, right? Easier on the eyes. So it has all the metrics that we care about. We care about debt. We care about payout ratio. We care about FFO growth, right? Dividend growth. And then share growth or core FFO, right? FFO is funds from operations. So we care about that stuff as REIT investors. And the score that it gets from all REITs is 100 out of 100. So again, this, by those metrics, is a very well-managed real estate investment trust. Of course, you still have to do a lot of due diligence. You still have to look through the numbers yourself to see if this fits with your investment criteria, with your investment style. Because again, this is not a sexy, fancy AI stock, technology stock, or any of that sort of thing. it doesn't grow like it does, for Nvidia or for Palantir or anything like that. This is a very slow grower. This is real estate. It takes time for it to grow. Okay. We've been in this bear market for what seems like 3 years now, ever since the highs of 2021 and then the crashing of 2022 and forward because of interest rates and everything else. I think we're due for, or long overdue at this point, for a huge rally as soon as that 10-year treasury comes down, as soon as those interest rates come down. So I'm a big believer in SUI. I just think they're a fantastic company. It's not a sexy AI stock. It's just a simple business. They purchase manufactured housing, RV parks, they put tenants there, and they rent them out and they collect cash flow, right? It's a very simple business model. So just looking at this, they've been paying dividends since about 1994, and it looks like they've never really truly missed any time, right? They've been consistent in their payouts, and here you guys can see those special dividends that they paid out, right? So this is why you're getting like a 325% increase on their dividend, right? But really, it's much lower than that. So they have a 32-year dividend streak, all right, 8-year dividend growth streak. So again, I like this company. I like this REIT, okay? So just some other metrics, their payout ratios, the 5-year CAGR, the 3-year CAGR, 3-year CAGR is at 110%, the 5-year CAGR is at 84% compounded annual growth rate. So again, very, very good, very attractive. All right, so that'll pretty much do it for SUI. Again, you guys can look at this, check out the website, allreits.com. I'll put a link down below in the description for you guys so you can check it out. But again, this, just by all metrics, this SUI is just such a great REIT. Again, very, very responsible with debt. Okay, they're sitting at 44% debt to assets. That's that's kind of the sweet spot. You want to be at like half, maybe even less than that if you can. You don't want to be way too over leveraged, because when you're over leveraged and we hit these high interest rate environments, that is detrimental to REITs. Okay, that could be a sign of a REIT that's about to collapse or implode. So you just want to be very careful and mindful of those things. But again, allreits.com makes life so much easier. Anyways, guys, that'll do it for this video. If you like this content, be sure to hit that like button. All right, let me know down below in the comments if you're investing in any REITs. What REITs are you a fan of? What REITs do you like? And if you made it this far in the video, comment SUI so I know you made it this far. All right, guys, appreciate you. I'll see you in the next video. Take care.